All right, we live. Hey, what's going on, YouTube? This is Mark checking in. There's Georgie with the Rolly. We're just having a little bit of fun here in the office today. Quad witch kind of days, they tend to be the tougher days to trade. And so we've signed out of the room. The room did actually respectably well today, considering it is quad witch. With quad witch, generally comes a lot of chop, a lot of volatility, and not much direction. And that's pretty much what we have seen in the markets today. S&P 500, kind of sold off of its overnight highs, failed to get back above those 18s, and kind of sold off back to the lower end of the range here. Not that much as far as economic releases this morning. However, we did have a bunch of U.S. Fed speakers from the Federal Reserve speaking today. Notably, we had Bullard speak, we had Rosengren speak, and then we also had Fed Vice Chair Clarida speak as well. So let's go over some of the major squawks, major drivers throughout the U.S. session. Like I said, we didn't really have anything as far as economic releases, but what we did have was this Fed speak. So to summarize what we had, Fed's Bullard, who is a dove and a voter, dissented from recent Fed rate cut decision, reiterates stance that a large 50 basis point cut was more appropriate. So you got an actual voter from the Fed. Granted, he is a dove, so naturally he's going to look to be cutting rates, etc., adding into QE. And, this is kind of the person that you'd be looking to replace Jay Powell if anything were to happen to Powell. So it's interesting to see those comments coming from Bullard. We also had Fed's Rosengren, who is a hawk and was also a dissenter for this rate cut. I mentioned that policy is accommodative, rate cut is not costless. We also had Fed Vice Chair Clarida, who is moderate and also a voter. So all of what these voters say matters in the grand scheme of things, because their votes can really drive, or not drive, but it can add to what the Fed Chair Powell is thinking and what the Fed might be doing going forward. So voters typically, you want to be focusing more on what the voters have to say as opposed to the non-voters. Non-voters don't really matter because, like I said, their vote, or rather, they don't have an opportunity to cast a vote to affect whether the FOMC, or rather whether the Fed goes through with a decision, rate cut decision, or not. All right, so all of the speakers today were voters, and Fed Vice Chair Clarida mentioned that the economy is in a good place, but with the expansion, there are also some risks. We have a healthy range of thoughts on FOMC, so not really adding too much as far as any good or useful commentary for us. The final driver that came out through the U.S. session was reportedly from U.S. President Trump, mentioning that they are not interested in a limited China deal, and this is according to the Treasury aide. And so that's basically what we've had on this morning session, and nothing really else on the agenda. Again, this is a quad witch day, which means that we're likely going to be getting some volatility into the market close, as institutions are looking to roll over into the future dated contracts. So, we typically don't really trade these kinds of days. We did trade it today, but that being said, you kind of want to stay out of it for the remainder of the session. It gets a little bit volatile, it gets a little bit crazy going into the close, and the moves don't really make sense. So if you're tracking order flow, if you're doing technical analysis, trying to day trade using those strategies, it becomes a little bit more difficult to qualify trades simply because it's moving quickly, and just because it's dumping does not necessarily mean sellers are coming through. It might just be an institution offloading this contract and rolling and then buying the future dated contract. All right, so if you are down on the session, or if you haven't done anything, I'd really recommend you to step away from the screens, start your weekend off early, and enjoy the week and come back strong on Monday. However, if you did have a green day in the morning part of the session, I'd also give you the same advice. Try not to snatch defeat from the jaws of victory, and look to start the weekend off on a positive note and come back in on Monday and we look to do this all again. All right, so that's what we got as far as economic releases, economic data that came through the wires this morning. Let me close those up on my charts here, and let's jump onto the actual charts. So here are the charts. And before I get to this part, let me just say hello to our interactive members here. So hello, George. Hello, William. I can see there's another 20 of you, but you guys are a little bit more shy, which is fine. By all means, say hello in the interactive chat. Let's get this thing going. There we go. There's Francisco. Awesome. So here are my charts, guys. And the first thing you'll kind of see on my quote board right over here is the volume. Very dry volume coming into this close, coming into the quad witch. Our SPUs, also known as the S&P 500 contracts, they have only traded 600 and 5,000 contracts on today's session. Super light volume, and this is kind of indicative of what you're seeing up here. Just a whole lot of nothing. You know, we did sell off a little bit, but the volume is relatively weak. And, you know, based on that, based on the fact that it is quad witch, I don't really see us escaping outside of the bounds of the current range that we're in here between these 05 3/4 and these 18s. All right, so that's what I see on there. Light volume on both of these assets, 380,000 on crude as well. You know, crude, when it's moving, when you tend to get good direction on it, you usually see around 500 to 600,000 contracts in this part of the session. You know, we're at 380,000, so that's also kind of indicative of where we are in terms of volatility and in terms of volume as well. Daily change percentage, again, you know, previous day close here on crude was the 58.69s. We're at the 58.86. So yeah, we are up a little bit from the previous day close. However, if you look at what's actually happened in today's session, rather from the pit session from 9 a.m., we basically opened on a bid, got back below the open, and now, surprise, surprise, we're right back around the open. So a whole bunch of nothing, you know, movement to the upside, movement to the downside, and we're kind of holding within the range as well. So both of these markets, to me, I'm not really anticipating much movement into the remainder of the session, just kind of seeing this thing as holding between these two ranges. And that's kind of the way I'd be looking to play it if I'd be sticking around for the remainder of the afternoon, but that's not going to be the case because it is so slow. SPUs here, daily change percentage, again, quite indicative of what we've been seeing, up 0.13%. Our previous day close came in at the 08 halves, or 08 quarters rather, and we are currently trading at the 12 halves, and so that's what we've got, 0.15% up. Again, a little bit deceiving of a picture because in the morning, you know, on the US session, we did get a nice little bid similar to what we saw in crude. We flushed the open, you know, flushed the open. Crude has since recovered, and SPUs are kind of on their way back. So more of range, more of range, more of range, not really anything exciting. And I'd recommend you guys to kind of walk away if you're looking to trade this thing into the end of the session. Especially if you're newer, do not try to, you know, milk anything out of these kinds of days, especially quad witching kind of a day. If you're newer, it's better to stay out. If anything, you can watch it and learn, but I wouldn't recommend risking any capital because it's very easy to get diced up in the spur of the volatility, and, you know, closing out the week in the red, which we don't look to do. All right, so that's what I'm seeing on both of these markets. Let me close up those charts. Let's get on the pivots here. SPU, or rather crude oil, left-hand side, S&P 500, also the SPUs on the right-hand side. And what I'm seeing on crude, you know, similar to what we were doing yesterday. We're just kind of hanging around the pivots and rather the R1s and the S1s. Kind of been flirting around that pivot all session. We did make a pop up to those R1s in the 59.20s, and we've kind of rolled back down. And, you know, we are finding some support around this level. You can argue that we are kind of building, rather what I am seeing more on a higher time frame basis, right? This is a 60-minute chart. You can't really see it on here because this is very zoomed in, but on the larger term scale, this guy is just looking like it's coiling up for something, you know, either a break to the upside or to the downside next week. But it's something that you can anticipate after, you know, a record setting move that we had from those 54.66s, I believe it was. If I zoom out to the left here, yeah, 54.66, as you can see, that's where the gap happened. It was about 10% of a gain that we've made, and we are making slightly lower lows and lower highs. And the way that I'm seeing this thing is kind of, I'm looking for it to resolve to the downside. Does that mean that it has to? Not at all. But the way that I'm seeing it, at the moment, the major swing highs here for me are being respected, right? So we are making lower lows, and we are making slightly higher or lower highs and slightly higher lows, which is the exact definition of a consolidation. All right, so this is one of the reasons why I'm saying, if you haven't done anything, or if you're looking to make money back today, kind of wait, because we're in a consolidation here. This thing is going to break out at one point or another, and we're going to look to ride that when it does. At this point of time, I'm not really seeing too many opportunities on this front. All right, so if you will be trading into this afternoon, just look to sell. Those are, they're losing my tongue today. There it is. So I'd be looking to sell rallies up into these 59.20s into the R1, and just looking for a move back down into the middle. Same thing with these lows here. I wouldn't really be looking to buy the lows just because I'm anticipating a breakdown. In this kind of a situation, I'd be more comfortable selling rallies, anticipating the breakdown, as opposed to trying to buy the support, hoping for a move back up, and just getting flushed on through. All right, so that's what I'm seeing on crude as far as the pivots are concerned. S&P 500, a little bit of chop. We've been saying that, we have closed that gap. Oops, let me draw this a little bit straighter. We have closed the gap from the weekend. All right, we did have a little run up. We've kind of been consolidating this level for a majority of the week. We did on FOMC day test the lows of that range, as you can see here, and we just shot right back up, broke that previous high, rotated back down, held that level. So that to me is a higher low. Now we've kind of pressed up into that previous resistance level, rotated down, and now we're just kind of hovering about, again, kind of in a consolidation at this point. I'm just seeing, come down, rotate it off, come down. We are holding that pivot on today's session. So like I said, be looking for rotations back up into that R1, into these 24.75. Our all-time highs remain at those 30.29s. I really thought that we'd hit it this week on the back of the FOMC, but that's the market. Sometimes they'll throw you curveballs, and it looks like it's waiting for next week, maybe into the end of September, in order to try pressing those highs. So we'll see what happens with this. Ultimately, as long as we remain above the pivot, I'd be comfortable with the upside, back up into these 19s or so. All right, so that's what I'm seeing on the pivot charts. Let me get back on here so I can see if there's any new comments. Nope, no new comments from you guys. That's all right. Oops. Let's open up crude here. All right, so here's crude, and what you are seeing is off of the open, we had a nice little bid, traded up into the previous day high, and we kind of sold off from there. Didn't quite get down into the overnight low before we bounced up. Here, we kind of hovered around this level. Sellers really should have got it through here. We had a couple of rotations at the top of structure, and on this breakdown, if the sellers are really in control today, that should have gone. It did not go. Instead, what we did was we came right back into this little support level, that little range that preceded the breakout. We found some support. Now we're back around previous highs. All right, so we're back above the open, back above the view apps, back above the previous day close, back above the 5-day point of control. So as you might imagine, this is just a chop zone in the middle. You don't really want to be doing anything in there. At this point, we are finding resistance at the overnight high. You can see that we did sell off from that level earlier this morning. We did have some rotations up there, came back up, broke above the previous highs, and then failed to rotate any higher from there. So there is some rotations happening here. There is some selling happening. The only problem for me trying to get short there is that you've got a whole bunch of what should be support in front of the, not in front of the way, but in front of where your profit target would be, right? The risk reward doesn't really make sense at this level, so I'm not looking for any shorts at this point up here. Maybe if it gets back up into the 59.20s, we can look to hit it back over the head, but at this point, it's just more support showing up here than I'd like to see if I'd like to get short. Ideally, you know, the support would be somewhere down here, which would give me enough room from these 58.90s down to these 50s or so to catch a nice little trade. However, that being said, you know, the support is there, so I'm not looking to qualify anything to the downside once we're here. Maybe once we get up to these 20s, you can see this didn't really spend much time at this level. We kind of just traded into it and then sold off aggressively. And so that's kind of what I'm watching for if we can get back up into that level. Your previous day high also comes in at these 59.09s or so. So as we approach that, I'd start anticipating sellers getting a little bit more excited to jump into this thing and press it back down, at least into these overnight highs. If it gets back in here, you know, you could argue you might have an opportunity for a potential long back up for a move higher. But the next best trade for me is really wait for it to get up in these 90s and then look to sell it back down to these overnight highs. All right, so that's what I've got on crude oil. On the S&P 500, I've got nothing. That's the update. I'm just kidding, guys. S&P not really doing too much on today's session. You guys can see we kind of opened up in the middle of our range here. We did test the upper end of the range, and you can see why I like this range. We had a nice little flip zone here, came up, held as resistance, came up, held as resistance, and we saw a little bit of resistance here overnight. And then on the open of the US session, we kind of traded right back into there, took a couple of rotations, and ultimately sunk it back below the open, below the VWAP, below the value area high, and right into, surprise, surprise, the previous day close right at the 8-quarter. And from there, we have seen a bit of a bounce coming back up into this zone, right? So I'm not really liking it in the middle of the zone. You know, that being said, if you're looking at structure in specific, we did take out any buy stops that were up here, and we kind of got anybody that got long up there, we puked their sell stops into that region. And so now, you know, we did bounce off of this level. This is kind of making a higher low, and we're right back in the middle of the range. So what would I be looking for here? Well, if this is truly a higher low from that low, right? So rotates up, swings lower. If this is truly a higher low, this thing should have no problem getting back above that overnight high. If that happens, then you could start looking for pullbacks, maybe into the open VWAPs for a run up higher. At this point, it's still a little bit too early. And you're in the middle of the range. So I'd like to see a little bit more decisiveness out of this market before trying to get long. And that being said, you know, I don't think that's going to fully form into this Friday close. I think we'll probably get something, maybe a break up, kind of hang around there into the close. But who knows? Maybe we come back into those previous day highs. Ultimately, if you're following structure, what you are seeing is rotations. We broke down rotation. We broke down pulling back. If we start seeing some more rotations, this thing should come back down here. All right, so that's the flip side of it. If this thing is not a higher low, this is a level that's going to hold, and then we should see a pretty strong breakdown of that level back below the overnight lows, at which point we can say, all right, you know, this is just a pullback. This was a corrective move. We're looking to continue down, and then if that happens, then we'll be looking for rotations back up to hit this thing back over the head, back under the 3,000s. All right, so that's what I got on both of these markets. A little bit of a higher level overview, but that's kind of what you got to look at, especially in these parts of the days and in these kinds of sessions where you've got the quad witching happening throughout the session. All right, so that's what we've got on that front. Let me bring up our final little bit here before I share a pretty exciting little announcement for you guys with regards to what we are up to this afternoon. All right, so here is the room's performance for the day, September 20th. We closed the day out 75% positive, 45% were up, 30% were flat, and 24% were down on the session. So good number overall. You can see we've had a pretty strong week thus far. Pretty strong week thus far. which is driving our average back up a little bit higher. One thing I do want to point out, excuse me, in today's results is this number right here, the 30% that were flat. What this number means is that a lot of traders today were in the room were flat, which means that they were scratching out of positions, you know, taking break even plus one, break even plus twos, even break even minus ones, break even minus twos. And so what that means is that traders were actively trying to disqualify their trades when they got in them, because these kinds of sessions require you to be very quick. You know, we often say be patient. These are the kinds of days where you do not really want to be patient with your trades once you're in them. If you're holding on for it too long, that trade starts going from having an actual edge to becoming hope. And when that line crosses between an actual edge and hope starting to creep in, that's really when you should be scratching. And our trade pros, they find good levels, and the levels that they get in at oftentimes offer them an opportunity to scratch out before, you know, a full stop gets hit. So yes, we do have stops that we put on each of our brackets, each of our trades, but it's fairly seldom that we actually get the full stop triggered. We often scratch out for a couple of ticks before, you know, we look to reevaluate the trade. That way you get to save a little bit of your mental capital. You don't get married to the idea. And it also helps from a psychological standpoint that if you get into a trade that you don't like, you can scratch out of it. And that prevents the fear of actually placing trades. Because if you're scared of losing money for taking a trade, then if you build up the habit of scratching when you're getting into trades that you're not really liking, or you're just, you know, when you scratch, you can give yourself the time to sit back, reevaluate the trade. Do you like it? If yes, if you scratched out of a trade and you still like it, you can get back in, and you're, you know, instead of being down, say 9 ticks on a full crude stop loss, you'd be down, say 2 or 3 ticks. All right. So from a risk management perspective and from a mental, physical psychological standpoint, it really helps. These little hacks really help over the long run with consistency, because you get more confident in yourself, you get more confident in taking trades, and you get more confident with scratching out of trades. Sure, scratching out of trades sometimes means you're going to scratch out for maybe a +1, +2 tick winner when the thing goes, you know, to full profit, but that's part of the game. All right. So as long as you're keeping the losses small and letting your winners run, that's what matters at the end of the day, and that's what's going to get you paid and keep you in this for the long run. All right, so that is a bit of a rant, and that rant is now over, guys. I appreciate you for spending this time with me here on YouTube. And the last thing that I will mention before signing off here is that we do have the infamous Chicago trader Anthony Drager here from Edge Trading Group in the office today. He's just in the other side with George, and what we're going to be doing is we're going to be holding a live Q&A this afternoon. And again, because the market's slow, we figured we'd give you guys some extra value, some extra content into the weekend. And what's better than having two professional day traders that you can ask any of your questions to. So Anthony Drager and George Popazov, our head trader, are both going to be hosting this live Q&A session. If you guys want to take part in that, make sure to subscribe to the channel, make sure to like it, and thanks, Willie. And make sure to set a reminder. I believe it's gonna, if you do subscribe, if you hit that notification bell, you will get a notification when they do go live. But if not, what you can do is make sure to set your watches, which I don't have on me right now, to 2 p.m. Eastern time. All right, 2 p.m. Eastern time. You guys will see Drager and George on the screens answering your questions. So you guys have about an hour and a half to get your best questions together, and make sure to show up. And if there's anything you've been wondering, if you've been on the fence, you want to know more about us, if you want to know more about the styles, or you want to just get a little bit more insight into, you know, the professional trader psychology, into their mindset. You know, strategy is one thing, but strategies can be learned quite quickly. What makes a trader successful at the end of the day is all what's in here. All right, so I would encourage you guys, if you are asking questions, to ask questions more so with regards to the development of becoming a successful trader, more so than strategies, because strategies will only get you so far. The psychology is what's really important. All right, so that is my rant, and that is a rant that is hashtag done. All right, so that's me for this week. I hope you guys enjoyed it. We'll be back on at 2 p.m. with the lovely gentlemen, George and Anthony. And until then, good luck and good trading, guys. Thanks so much. Make sure to like the page. Make sure to like if you enjoy what we're doing here, and make sure to join us at 2 p.m. and have those questions ready for our gentlemen. All right, take care, guys.